All right. I was going to do this yesterday, but I'm very bad with time management. So this is just going to be the super secret bear market tips video that, I was going to make yesterday. So these aren't going to be anything special. They're just going to be real simple ones. But if incorporated with your current thesis and strategy for the long term, I think it'll serve you well in the future months/years. At least I hope. We'll get into the first one, which is how I manage, or what do I do with my fiat and crypto. So basically just funds. So with my crypto, I keep it on a ledger, and my fiat, I just keep it in a FDIC insured type bank. Just basically like a government insurance if the financial institution that you're storing your funds with goes down or goes under, basically. They'll insure your money. So that's just what I do. I don't really keep money in stables. I'm not sure if anyone else thinks that's a bad idea, but I just prefer to take my money off the chain. And with crypto, my Biddy and ETH, I just store it in a ledger. I've got a little bit of ETH in a MetaMask wallet just for if that pudgy penguin or that gobby I want is cheap. So I just keep a little bit of ETH in the MetaMask, but other than that, all on the ledger. And then the second one I was going to speak about, what was it? I'm just thinking off the top of my head here. Is if you have a thesis, make sure you stick to it. So what do I mean by that? Well, for instance, if you have a conviction like me on Bitcoin and Ethereum, you think they'll go up in the future, in a few years or however long you think, don't let things that aren't important influence your decision. So don't let people saying stuff like, the RSI is overbought, it's going to go down, 12K, it's going to 12K, Don't let people think that, because everyone has a specific bias. For me, I have a bias towards the bulls. Although I understand price can go lower, which is why I try to keep a neutral ground in this, I am still at heart a bull, because I think this asset class will go up over time. But if you're allowing yourself to get influenced by other people's opinions, it's usually a recipe for disaster. And what can happen is you'll start to second guess yourself, which is not what you want to do in these markets. You want to form a thesis after doing lots of research, taking a bit from every savvy individual on this Bird app, taking the best tips possible for your financial situation, and then compiling them together with your own opinions on the market. And that's probably the best way to do it, in my opinion. Anything other than that, I probably would advise against, basically. Always make sure it's your own opinion. The problem is you might get lucky once with someone else's call, but the problem is if you're waiting for someone else, or you copy trading someone else, they'll release their position after they've bought. So you have no edge in the market, basically. And it's just not a good way to go through life. If you're relying on other people's opinions, it's just not good. So yeah, form your own thesis, but also be wary of fundamental changes. So if something goes wrong, like when the Alameda balance sheet went down, got leaked, that was probably a fundamental shift in that Ponzi token. The people that were holding it were probably holding it for two reasons. One, just a Ponzi token that they think will go up over time. Other people will buy it and then they could sell higher. And two, they probably thought it was similar to a security. Basically, the price of the FTT token would go up as FTX, the exchange, would grow. So those two reasons is why those two reasons would be a valid thesis for holding the FTT token. But once the Alameda balance sheet got leaked and it was confirmed that it was their balance sheet, it's an invalidation. So unless something fundamentally changes, there's no point in changing your thesis, especially if it's the two majors. So, and that's what I've got at the moment. I don't really have anything else. So yeah. What else? What else? And leading on to that, don't check the charts all day. That's just something very simple. But if you're getting caught up checking the charts all the time, as I previously stated, you'll probably second guess yourself especially if you have a very short-term view of the market, which I don't personally. Some other people will. I have a 3 to 5 year period where I'm happy to work through this entire bear market, where whatever we are in. I don't even know what we're in right now. We're in like a rally that could turn into a bull market, or it could just go back down. So I have no idea what's going to happen, but I'm in it for the long game, and I'll just try to sell a lot higher. But I don't let short-term price action dictate my overall view of the market or overall view of my investment thesis on the two majors that I hold spot of. So it's just a simple thing, and I know all of you probably know this, but and I do realize it's hard to just say, oh, don't check the charts, when, especially if you have a lot of capital invested in this space. And also it's difficult not to check the charts if you're on CT a lot, because even if you're not checking them, you'll see a lot of screenshots of people posting stuff. So I do admit it is difficult, but yeah, try to just get outside, try to just avoid all the noise, unless it's something, as I said, fundamentally important, like the FTX Alameda balance sheet. When that happened, I feel like a lot of people were sort of 50-50. They acknowledged it, but they didn't think anything of it in terms of how bad it would get. But that's why you always have to de-risk sometimes, especially if it's BTC and ETH, or just BTC in general, because BTC doesn't really have a singular person backing it like Vitalik. But if it's something like that, take them off exchanges. And I know some people like keeping stuff on exchanges, which is fine, but I just think in those dire periods, it's very scary to keep stuff on exchanges. But that's just me. And yeah, I didn't want to make this video too long. And I was also gonna say, if you are on the wage cuck, just keep at it. And what I'd recommend overall is make sure you've got all your other things in your life sorted before getting into these markets, in terms of, have you got emergency funds for a few months? Are you building your capital? Are you not, or are you spending more than you're earning? So once you've got all that in order, you're paying your cost of living stuff. And I know cost of living is expensive right now, but if you've got all that sorted, it's much easier to come into the market with no bias whatsoever, because if price goes under what you bought it for, you're pretty good in terms of your financial position. If you're deploying too much capital into this market in comparison to what you need for just to live, then you're more inclined to sell at a bad point, when price is probably at its lowest and it's ready to go back up, but you sell because you think it's going to go lower, and plus you probably need the money if it did go lower. So it's an important thing to do. And once you've got all that in order, in my opinion, it's fine to DCA relative to where BTC was in its all-time high. It's still relatively low. So although we've had this rally, it's still pretty low. So if you've got a view that BTC will go back to its all-time high, I don't see it. As long as you're happy to hold spot without any problems, it's not too bad of a time to buy. Obviously 16K was the perfect time to buy, and I did nibble at that price, but I'm not gonna not gonna say, oh, I'm the perfect trader, because I didn't expose myself to as much as I wished I did. Obviously, I'm only probably 30% allocated in terms of how much I want allocated for a full blown bull market if it was to reappear. So I still got some ground to cover, but yeah, I think it's perfectly safe if, as I said, if you've got all those other things in place, and you have the view that the price will go back to 69 or 60K or something. There's no problem with coming into the market, especially if you're holding spot. So yeah, those were just some simple, super secret bear market tips. Well, they weren't very super secret, because they were pretty basic tips. But I thought if you're doing all those things, you'll do well in your life. It's better than, getting one of those conservative portfolio managers managing your money. I still think fundamentally that the economy will still function pretty similar to what it has in the last 10 to 15 years. Maybe I'm wrong. And I'm just saying this as long as no black swan event happens, like a World War III or something ridiculously crazy happens. I'm just saying if the world somehow works itself out. So that's my view. I think the market will figure itself out eventually, and most people ideally think that going along is a much easier thing to do than being short. So yeah, that's just a quick video, and yeah, goodbye.